let's see that what are the properties of green bonds. So first of all, we will define green bonds. We will define also what are they special at all, or what are their possible specialties. And not just in the case of the green story behind this, but actually the bonds. So yields, issuance, issuers, sectors, and so on. So we will look for a lot of data from Refinitiv Eikon and to see at least the different trends and common features. And after that, we will check that what is happening exactly in this specific region. So are they more volatile or less volatile than the ordinary sovereign bonds? So this presentation is based on our actual paper, which was accepted last week. So sooner or later it will be published in a small journal in European Financial Accounting Journal. So it will be available for reading. But first of all, key definitions. So when we have to talk about any kind of green bond, then first of all the objective is to reach some kind of low carbon economy where we can see that low carbon so low energy consumption and pollution will be there. My concern is that low energy consumption can be achieved without emitting carbon, but so this can be problems, but still we can see that, okay, the pollution part we can understand it. And green finances can be used or supposed to be used to achieve the related financing needs, so practically for fundraising. And we can see the public finance and also the capital market motives behind these issuances. And what we can see here that it will require projects to be funded. Then to fund these projects we have bond issuance. Also we need banks to support all this procedure, investment bank to organize the issuance, or commercial banks to purchase these bonds into their portfolio, or mutual funds to focus on such investments, so and especially ETFs, which can also follow such green bond indices. Also, carbon market instruments, like I mentioned, so if we have any kind of index which follows green assets, then it can generate a secondary market for ETFs, so that's why it's also useful. Fiscal instruments. Can we create favorable conditions for such assets? So maybe lower taxes, capital gain tax, for example, or if the sector should pay any kind of carbon-related tax, then there are many excerpts from it. So what are the incentives behind this? Monetary policy instruments. So interest rate is one thing, but the other thing what Mercedes mentioned last week, that how green quantitative easing, so bond purchase programs, can affect, bias, okay, it depends on the view, but affect these markets, or even provide incentives. And also we can raise the question that what is happening if we are starting to create additional reserves. So mandatory reserves must be extended if it's not green, or it can be reduced if it's green. Can we do this? So that's why we will check the defaults on this market. So because now there are, since 2004, we can find defaulted bonds on this market. So we will see that what are the features among the defaulted bonds. We have fintech. Still, I have no idea what is fintech. So I have a previous. So I know a guy who was at the same year at this university when we were students, and he's defending his PhD thesis right now about fintech. And I was sitting there, to be honest, at the pre-defense. I even checked the thesis booklet, and still I have no idea how can someone summarize fintech in one comprehensive sentence to define it. What is this? Because usually this is a toilet paper long list that, oh, this can be there, that can be there, it will make everything more fancier and efficient. And usually what we can see that practically most of the fintech features should be provided by banks, just they are too lazy or they were too lazy to do so, because, well, anyway, they can get their commission in the old-fashioned way as well. So after the next financial crisis, there is always the next financial crisis. So after that one, we will see that what is viable from fintech and what is not. Because usually we can see that if the business cycle is going up, so we are in a booming phase, then financial innovations are popping up since the 70s. Or maybe even before, but we can say that since the 70s, it's always the trend that innovations are coming, and then some of them will be removed from the market by the next recession, and after that we can see which concepts and which companies are viable and which concepts and companies are non-viable. So right now I'm waiting for this in the case of the fintech, because if I'm raising the question that, yeah, but is this stable or creating increasing financial stability or not, which is for me a relevant question, then I was not able to get any reasonable answer or well-supported answer. So that's why I'm really skeptical in the case of fintech. But let's assume that since fintech is trying to remove the frictions from the financial system, so it tries to make it much more efficient, maybe it can support green finance. We will see. Community-based financing, in this case I have no idea, because practically the entire bond market is a community-based financing, because people are buying the bonds, maybe through a mutual fund, maybe through their bank, but at the end of the day we can find only household savings in the system. So no Martians are buying government bonds from the earth, so yeah. Okay, so I'm even more skeptical in this case, but let's go forward. So what are the main features of green bonds? So first of all, when I was checking the Eikon database, I was able to see that some green bonds are verified and certified by an external certificate agency. Eikon was providing to, or at least listing to certification agency, but sometimes it's just self-proclaimed. So the issuer says that this is a green bond, but nobody checks this, how it's used up. So, okay, but we can see that green bonds are financial instruments with fixed income, with the goal to find projects to the green conversion to a low carbon economy. So we should have some kind of objective. And later on we will see from the sectoral and objective breakdown that it can be focusing on the real estate business, it can focus on transportation, it can focus on energy sector, and so on and so on. But also we can find here issuers who are sovereign issuers. We can find here banks. So the first green bond was issued by the European Investment Bank, so we can see also agency-like banks, so not just private banks, but also specialized banks as well. And also we can find their corporate bonds as well, so companies. What are the expected benefits? So first of all, these projects supposed to provide some kind of security against environmental risks. Sometimes I don't understand why they are thinking this. So if we are messing up the climate because of our excessive CO2 emission, then still there will be drought. Maybe we are improving transportation or insulating buildings, but the drought will still be there, so we will have no food. So, but okay, we can say that at least during this process, sooner or later, on macro level, as we were able to see last time in the case of the DICE model, so 5 millennia later, maybe we can have positive influence. So, yeah, okay. So not all the environmental risks, but we can focus on one or two specific features here. Also, it strengthens the issuer's reputation and social confidence. So maybe this is also highly relevant. So, on one hand, if Hungarian government would use up some of their money, which were collected through green bond issuance, to insulate buildings, and I don't know why, because we issued green bonds, but I have no idea how this money is used up. I did not check it, but what I can see that there is absolutely no program right now in Hungary to insulate in the housing sector or to improve energy efficiency in the real estate sector. So if they would use this up, then I would be really proud that maybe I can be the beneficiary, but also if I'm still not the beneficiary of this program, then so my social confidence would be increasing a bit. Then it can lower interest rates and higher exchange rates at this time of issuance. We have to stop here because I have no idea how it can lower interest rates. So practically, we have an anterior slide which talks about that. Is there any kind of green bond premium? So if we are comparing green bonds with traditional bonds, is there any premium in the case of the yields? Or maybe, so it can be positive because market thinks it's more riskier, or it's a negative because market thinks it's less riskier, or it has absolutely nothing to do with that. I will list a lot of papers which were proving all the different arguments. So this thing is at least questionable. Higher exchange rates. Majority of the issuance is happening on the Eurobond market. So most of the bonds are issued in euros. A smaller segment is issued in US dollars, and then we can find other regional currencies as well. So maybe it can have a currency effect, but no, I don't know. So I think it's even more troublesome to use this assumption. And okay, it's diversified and it has a strong investor base. Also, we will see during the next crisis situation that how this green bond market will react on things. Because right now, okay, we can have different shocks, so we can test the reaction on COVID crisis, we can check what happened during the Russian invasion in Ukraine. So we have possible scenarios to see what is happening with the bond markets, but I have doubts about the strength of the investor base. So I don't think so that investors would be way stronger on the green bond market than on the conventional market, because I cannot find any additional features there. Disadvantage. So obviously there is a limited scope of potential projects, and you have to be really careful how you can define this. Also, there is an additional cost of qualification. So if you are issuing a certified green bond, at least avoid the possibility of greenwashing or misuse of green funds. Then it has this thing, and also maybe we are not able to experience the expected benefits at all. So there is a chance that these expected benefits are just on the paper, and in the future, analysts can say that it's not happened at all. But what we can see here that since these projects are focusing on longer perspectives and longer time periods, that's why we can see that also the maturity is longer than usual. 10 years, so on average it's 2 years longer. What we can see in the literature. Also preferred currency, I mentioned already that this is euro and also US dollar. Main issuers are still sovereigns, and especially we can find a lot of bond issuances in France and in Germany. And also we can find financial sector and energy providers. Financial sector can be misleading here because what we can see here that after that these funds will be redirected to elsewhere inside the economy. Just the commercial bank says that let's issue green bonds, and then all of our green lending programs will be funded from this thing. So that's why it's also a problem, because we are losing the transparency. So how this money is used up, which sectors are using up to what. And also, we should not forget about the European Central Bank, because they are conducting these green bond purchasing programs called as green quantitative easing. And quantitative easing has already some issues, because still the fundamentals of the underlying quantitative easing model, so how you can quantify the effects of the bond purchases on the entire yield curve, how it influences or changes or biases the transmission mechanism of monetary policy on the entire yield curve and on the economy, and also on inflation, is not clear, still not clear yet, so after nearly 1.5 decades of using this, and now they are adding green quantitative easing. But I can understand, just in this case we are thinking about green bond market as a charity. And financial investments are never charity. So if I'm an investor, if I'm putting my money, what remained, in any kind of investments, I don't want to run it as a charity, because come on, I need some positive return on this after taking inflation also out from this equation. So yeah, I don't like this approach. First green bonds appeared in 2007, but practically we have data, reliable data, only since 2012. So before of that, the market is so small that it isn't able to find anything. So if we are checking Refinitiv Eikon, the green bond guide database, then we can find a lot of things. So first of all, today we will see everything in euro denomination, because it was easier, since we were able to see that most of the bonds are issued already in euros. And also we can see that issuance started to ramp up only after 2014. So before that we can find something, but it would be completely useless. And we can see that the main issuer countries are, or is Germany, with this orange color, then the next thing with the purple is China, then we can see France here, and if I remember right, this was mainly sovereign issuance, so it's not corporate business, but still we can see that it's France. Then also we can see, yeah, there's, so this is United States, the blue one. Then we can find Netherlands, Luxembourg, and UK, and Spain, Belgium, Italy, and so on. I tried to download on Eurozone level or EU level, but there was no such a breakdown, so only country-wise. And also we can see that COVID was not stopping the emission. Sorry, this is oustanding debt. So this is not the issuance, this is all the debt together. And also what we can see here that in this year the growth stopped. So actually it started to turn down. Maybe previous bonds started to expire, so it can be also a reason, but still we cannot find the previous growth in the market. Okay, so status. And mostly what we can see that most of the bonds are issued or sometimes in this reopening phase, and it's really hard to find any default, but still we can find it from the last year and from 2020 and so on. So it's sometimes it happens. The first default data is from 2014, but later on we will check all the breakdown here. Floating versus fixed interest rate. So it's fitting to the happenings from the last decade, so we can see that everybody is focusing on fixed coupons, because if interest rates are really low, then you would like to fix this thing for your bond, because as a debtor it's much easier to say that okay, let's tap the low interest environment. Obviously for an investor this is a terrible thing, because in this case if interest rates are increasing, then bond prices will fall immediately and then you can lose a lot of money. So that's why if someone would tell right now that I should invest into green bonds and these green bonds are provided only with fixed coupons, I would say that no, let's wait until we are reaching the peak in the case of inflation and interest rate increases, then immediately I'll start to purchase, because this is at the discounted price, and then let's see what happens later on. And also funny, because we can see that inflation started to increase in 2009, just after that COVID shock came, and we can see that the market started to react somehow. So they started to sell floating coupons, but still we cannot say that even in this inflationary environment, still the issuers were able to force the market to purchase or accept the fixed coupons. Obviously, right now we cannot say that what is the yield here, but we were able to do this. Currencies. So what you can see here, mostly euro is preferred, but in many cases we can see that this is Eurobond issuance. So many countries which are not, or companies which are not part of the Eurozone, still issuing in euros. So this is also how you can collect foreign exchange denominated funding. And obviously US dollar is highly preferred. Then Chinese yuan is also on the market. Finally, we can buy something with Chinese yuan denominations. British pounds, Swedish krona, and so on. So after that, we can find regional currencies or even safe haven currencies like Swiss franc on this menu. So, okay, issuers. So can we find here mass of companies? And yeah, so right now this is just naming. So mostly we cannot define the issuer by name in most of the cases, but still we can find major players. So European Investment Bank was the flagship of issuing green bonds at the beginning. Then we can see that as the market was scaling up, then their significance started to disappear. Also we can see here, I don't know what is KFB, KFW.
It's a German development bank.
Ah, thank you. Okay, so we have find German entity, and also we can find here German Federal Republic government, Deutsche Bank. I don't know why Deutsche Bank still exists. So they were in so many different scandals in the last 1.5 decades. So I will waiting which will be the next scandal of theirs. Then we can find here also the EU, and and after that we can find other players as well. Issuer type. So yeah, this is what I was waiting for previously. So we can see here corporate issuer. So we can see that now the private sector starts to find this market niche and they start to grow in. We can think about the efficiency, but they are starting to use this quite happily. And also we can see that, yeah, agencies are there, but their previous importance is now starting to be a bit more marginalized. And also we can see here local municipalities. So in many countries, municipalities are also allowed to issue bonds for general funding or for specific projects, so we can see here this thing. And this is, I think, the most interesting feature, just it's quite hard to interpret, but we can see issuer bar sector. So I mentioned that for the banking sector, to provide any kind of green loans, then it's necessary to find or collect their liabilities somehow. So the easiest way is to issue bonds, and then this can be immediately channeled into to loans for small and medium enterprises, for households, and so on. So this is the retail output of the entire procedure. Then we can find obviously governments. But what we can see that governments, okay, in the past they were really important, then they start to, I cannot say marginalized, but they are not important, not as important anymore. Regardless all the fancy projects.
The government.
Yeah, sorry, this is the this is. But still, we can say that they are not the main players on the market anymore. Then public finance activities, so they can be maybe some specific projects. So this is what we can see here. That okay, it can there just okay. Then we can see electric utilities. This is what I was showing before. So these are the green. So, for example, BP announced that they would like to reach zero emission. But in this case, they would like to achieve zero emission in the case of oil extraction, in the case of the refining, in the case of operating all the offices abroad and so on. So this is not doesn't mean that they don't want to extract oil anymore, because still we need oil. So oil has many different usage. So fuel is just one thing. You need it for making this thing as well. So manufacturing requires different plastics, and also pharmaceutical industry also requires different chemical components which are created from oil. So also we need lubricants to let things move around. So so that's why, yeah, fuel is big business, but still. Then corporate financial services. Yes. Then corporate banks. Okay, this is a really interesting breakdown, because banks and corporate banks, okay, I understand the difference, just maybe if they would be after each other or next to each other, it would be much nicer, because practically we can see that okay, this is going down here, and actually this is the financial sector. Utilities, but let's see real estate, rental and development. which is this blue. Yeah, one of the blue here. I think that this is. So we can see the real estate sector is still not catching up. So we can say that 1/3 of all the carbon emission is related to households, and the energy efficiency could be significantly increased. So at least these are Hungarian data. So energy efficiency could be increased significantly by improving the conditions, heating, insulation conditions, and even cooling conditions in the case of the real estate sector. And what we can see here that, okay, they are there on the menu, just not that significant. My favorite component here, national security and international affairs. How can we interpret this? So, the new spy satellite uses up less, or has lower carbon footprint, or, okay, let's continue this idea, but it's intermodal passenger transportation. Okay, this is, I think, a quite clear thing here. So this, I don't know. For me, it can be green or it can be brown. Yeah. So my eyes is tricky from this point of view. So we can see that passenger transportation is also not affected as much as it's supposed to be, because this is also a sector which is highly into the carbon emission, and we can see that they are doing stuff, but it's way less. Okay, commercial rates, this is also real estate developers, just in this case when they are issuing specific securities on this field, so we should also add this line to be much more reasonable in the sectoral breakdown. Also construction and engineering, this could be also part of the real estate. And after that there is the other category. So we can see that nowadays the other category can be highly dominant with the other segments. And in the case of the objective, after we define that moving people around back and forth, it's not that relevant, at least in the case of the issuers, but in the case of the objective of the funding, then we can see that green transport is the main. So maybe what we are able to see that lots of bank funds, a lot of sovereign funding is directed towards this direction, but clean transport can be so many different things. So clean transport can be that if we are electrifying railways, or we are modernizing railways, or if we are saying that, okay, if we are moving anything on rivers, so on waterways, on ships, then it can be also much more energy efficient than moving it on with trucks. So if you are building some infrastructure on rivers, it can be also accounted as clean transportation. Also, if you are putting some sockets for electric cars to use it, then it can also support clean transportation. So it's either jolly joker what is happening here, but we can see that it's 30%. Another thing, energy efficiency. It's quite an obvious objective. The next thing, climate change adaptation. We can see that it's there. Okay, it's not that dominant, but still it's more than 10%, around 10% or between 10 and 20%. So this can be also important. Then my favorite, eligible green projects. So something which is green. This is not appearing so many times, so we can find it. This one. And, yeah. So it's Then renewable energy projects, okay, creating solar, wind, or geothermal energy. Then aquatic biodiversity conservation. Okay, so dealing with stuff which lives in water. So, okay. Then circular economy adapted eco-efficient products, production technologies, processes. Also recycling stuff. In this case, we can see that this is highly marginal. Which is interesting because EU even has projects related to this one. So in this summer in Szeged, they opened the new recycling facility which now processes 60% of all plastic materials to be sold on the market as raw materials. So even if we had something in Szeged, then I think it's highly evolved and market able product. And still we have some alternative energy and acquisition. Okay. So let's see that after mixing together the different issuers, so sovereign and private issuers. So let's see what is happening exactly in the European market and in the case of corporate issuance if we are focusing on the objectives at the continent. So even Iceland was added and even Brexit land, so Great Britain was also added to this sample. And if you are looking here, then we can find similar breakdown. So we can see transportation, energy efficiency, construction, and renewable energy projects are the main contributors here. And after that, we can find all the minor components. So we cannot find any major difference if you are looking on the recent years. So how European market is different from the global one. Then let's see why things going south. So what is happening in the case of defaulted bonds? So we can see that objective, I think it's quite diverse. So we cannot say that one sector is responsible or one objective is responsible for default. So we can see here that it was some kind of general eligible green project which went down, and energy efficiency went down, and energy efficiency and construction. No, so this is circular economy went down. Then there was a general purpose. We don't know what. Then it was related to the real estate sector. Real estate sector is still there. So what we can see here is also if you are checking the sector, so not the objective, that one default was related to solar electric utilities, one related to investment holding companies, which is absolutely not decided. Alternate electric utilities was in 2014, and also we can see that this was completely related to the real estate business, and also this one as well. So right now, green bonds are failing because of real estate sector. And after that, I tried to have some country breakdown. Just the problem is that if you are focusing on the country of origin, then you get the response that everything is listed on Cayman Islands or Bahamas and so on. So it was quite useless to define what is happening there. Or if I was using the other setting, the domicile setting, then it was saying that most of them were Eurobonds. So it was quite useless. So I had to focus on the company names. And we can see that it's a really China is affected, unfortunately, in so many cases. Maybe older cases or significant amount of cases. But since I was not able to get country breakdown, so we have just this educated guess, or if we are checking the names on the internet, sooner or later we can find something. But at least the good news is that practically we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 issuers, which went to default badly. But also we can see the story that in the first years only one company had or defaulted in the case of green bond market, and now variety increases. So this is the case where we can see that practically green bond market starts to be mature much more, because now there is a selection between the issuing companies that which projects are viable and which projects are non-viable, because they start to go to default. So sooner or later there must be a filter for the projects. So after that, then we have to talk about the premium, because from investor point of view this is, I think, the most relevant issue. So bond prices should reflect the following things. So first of all, market expectations, then credit risk, liquidity risk. So what is in the case of sovereign bonds, then country's public debt, fiscal policy, current account, so external balance and funding balance. And then in the case of budgetary balance, then we can talk about liquidity risk, so actually the size of the market, because we know that amount of trades and the influence on prices are related to each other. Then macroeconomic factors like interest rates, inflation, economic conditions, monetary policy, not just the interest rate, but much more like that, what is the balance sheet structure of the bank or the central bank and how it changes through purchase or sales programs. And of course there can be asset-specific factors, and at the end of the day we have to see that what is the premium compared to risk-free yields or benchmarks. So, because at the end of the day we can compare everything to short-term US government bond yields, and then see what are the differences. Or in the case of the EU, usually we are using German government bonds also. Same purposes. And the problem is that sometimes we don't know that how the premium is created. So there are different theories. So there is a theory of liquidity preference. So we are focusing only on short-term periods, because this is when we can prefer or get our liquidity or maintain our liquidity. So this is what I'm doing. So I'm in the first category. But there can be also the preferred habitat category. So there are different investors for the different majorities. So if you are a pension fund and you are generating revenues for decades until your pensioner will become a pensioner, then obviously you can create long-term investments as well. So that's why you have to provide premium for these investors only if you would like to incentivize them to move out from their preferred part of the yield curve. And also, in the case of short end of the yield curve, we can find most of the shocks which are coming from the economy, which are coming from the monetary policy. And at the same time, in the case of the long end, usually in the past we were able to see only the changes of the demand and supply. So sooner or later we will be affected by the transmission values. Nowadays it's also biased because quantitative easing focuses on long run bonds as well. So in 2014, when ECB initiated their own quantitative easing, they declared that they are focusing on 7-year to 10-year bond yields. Also, when a similar thing happened in Bank of Japan in 2013, they started to focus also on similar yields. So this is now less accurate, but in the past it was. Yeah, and the other problem is that, okay, in the case of short-term yield curve, so if central banks are going there and they are purchasing a lot of stuff there, sooner or later this will disappear from their balance sheet because bond will expire. So we can say that the influence of the central bank was just temporary because bonds are disappearing. But in the case of long run, to have this disappearance feature, then you have to wait for years, and sometimes if the central bank would want to react or they would like to liberalize the yield curve like it happened in October of 1979 when there was a really bad day for bond market traders and hedge funds in the United States. So in this case, they are forced to sell the asset. They are not able to sit down and wait until the bond expires if they have to do some kind of monetary policy step. Okay, green bond premium. Because after defining the premium, which is everywhere on the bond market, and especially we were talking about the term premium and also difference between the sovereign premium as well among countries or between private and sovereign entities. We should add also the green bond premium. So is there any added value here? Because if we can find added value, so green bonds are better, then we should have negative premium. Because they are less riskier or more fancier for the investors. If there is a negative added value, so practically we can say that, oh, now it's riskier, so I don't want to buy this, or maybe there is nothing at all. So you can see that 1, 2, 3, 4, 5, 6, 7, 8, 9, and maybe 10. So 10 articles were processed here, and in the paper even more. And what we can see here that it completely depended on their sample, what they analyzed. That is there a premium or there is no premium. So even some of them compared parallel bonds which were issued by the same country at the same time with the same maturity, just one was green and one other was not green. And in this case, they were able to find that there was a negative premium. So practically, this argument can be okay or supported sometimes, but practically, there is no general rule at all. So we can see that pros, cons, what is there and what is not there, because we can see that if we are issuing something like this, then the social and environmental commitments, so PR, will push up the price, the bond, or investors will try to diversify their portfolio. Because still they are saying that this bond can, since it has different risk exposure due to the speciality of the projects, maybe you can diversify with this. But I'm also quite suspicious because we should test it. So, and also what we cannot see here, how credit ratings are different. So I was checking the Refinitiv Eikon database, there was nothing about. So there was no credit rating breakdown of the different bonds. I checked it 2 times, so even if I missed it, then sorry, but I tried to find it, but there was nothing like this. Or tax benefit, this is absolute up to countries and up to governments, so it's absolutely varying in time and political focus. Yeah, I mentioned already ETFs. So this is maybe there, but this is maybe not, because the other set of the literature is not supporting this at all completely. So what we did here in our analysis, that we started to focus on volatility, because at least there is a consensus in the literature that maybe we can or cannot find a premium in the case of the yields, but still in the case of at the level of pricing uncertainty, the volatility is higher in green bonds. So there is a consensus that still the market is quite not sure or less sure about the pricing of green bonds. So what is the value here? So can we find similar things in the still in fund state, Hungarian and the Polish sovereign green bond market? So we had to look for bonds which are issued by these governments in euro denomination, and the market started to appear in 2016, so practically what we were able to do here is to check that what is happening in Poland. You can see that there were parallel bonds with longer maturities. Actually, what we can see here that the variable bonds, they are shorter maturity. And the entire presentation started that, oh, they have longer maturity, so, yeah, but not in the region. And also we were able to find one euro-denominated bond in Hungary, and also a quite similar green bond also in Hungary, so it's really small. We checked the Czech Republic. Obviously, they did not do anything. So they are waiting. They are public that is relatively low, so for them it doesn't matter. Do they have designated funds for that or not? And as a benchmark, we can see Germany to see that are we different or not. And obviously, to get the volatility data, we are using the Gauss model, because Gauss model is good for everything. So, and we can see the premium in the case of the yields, and this is quite disturbing. So if we are looking on the graph, then I cannot find anything or cannot see anything. So, so what is happening if we are comparing the similar maturity green bonds with the similar maturity non-green or traditional bonds, and we can find sometimes positive yield premium and sometimes negative yield premium. So this is again like what we were able to see in the literature. But I don't know what is happening here, so this is quite crazy. This is the Polish 5-year bond here. Or if we are checking the statistics, descriptive statistics, so these are the green bonds. Practically they are quite the same. So, okay, in the case of kurtosis, so these two Polish green bonds had a lot of extreme jumps back and forth, because kurtosis is supposed to be 3 to follow randomness, or to suggest that price changes were random, and in this case they are far from anything. But also if we are checking the rest of the data, we can see that usually we are above 3. But this is highly general on the bond markets or any capital market asset. So this is really rare that we find something starts with 3. Then it means that they are not affected by price swings. But in this case, we can see that one was German, the other was also German. This was also German. This is German, this is German. So maybe because they are benchmark economies, so they are not affected as much by market turbulences. And in the case of the emerging assets, we can see that, yeah, this is relatively high. Skewness. So we know that if this is positive, then it has a tendency to go up. And also we can see that Polish, so they are positive. No, this is German, this is negative. Interesting. And also, sorry, this is the Hungarian one. Why is it going down? Okay. It's supposed to also go upwards, but also we can find the same negative skewness in the case of the Hungarian asset. It's strange. Because, or at least for me surprising, because usually this is not what we can see in the case of Hungarian assets, so it's going up, but okay. So in the case of autocorrelation, so if we are checking the Jumbo's test, if we are able to find autocorrelation, then it means that the market is not efficient, even at the level of weak efficiency, because we can find market trends. So there is a market memory. If yields were increasing in the past, then they will increase today as well. And this autocorrelation is represented by the Jumbo's test, and the p-values are always under 0.05, except in the case of the German. Yes, except in the case of the German assets. But in the case of traditional ones, we can see in the case of Polish and other German. Yeah, so there is a Polish example when this is not happening, but otherwise this is just a German phenomenon. So strange. If we are checking the gauge parameters, so how volatility remembers, because usually we can see that the change in volatility absolutely depends on the previous state of volatility. So if the market was not able to price in the asset yesterday, then it will be not able to do this at the next day as well, or the next week, or the next quarter of year. So it depends on the frequency of the data set. And what we can see is also quite strange here, because this is when we can see, so this is fitting because the beta is the past volatility. So usually it's around 0.7, so 70% is the importance of the past volatility. So we can see that, yeah, in the case of green Polish bond for 8 years, it's okay, sort of okay-ish. I don't know what is happening here. So this is completely defined by noise, this German asset. Because this alphas are always the innovations or shocks which is generated randomly by the underlying probability distribution. So here we can see this. This is completely driven by volatility. And here, I have no idea what is happening, because these are zeros, so mostly Gauge model was failing terribly. And this is the textbook example that, okay, volatility is driven by past data. And also we can find similar features for the traditional bonds as well. So sometimes Gauge models are failing, but in most of the cases they can capture what is expected. And then let's see the volatility premium. And are they less volatile or more volatile? And what we can see here, that there were examples when they were less volatile. So, yeah, sorry, no. Yeah, because we needed an additional axis for this asset, because otherwise it was so volatile that we were not able to see anything at all. So we can see that volatility, okay, except in this case, or except this case, was tendenciously higher in the case of the green asset. In this specific Polish bond, but also we can see that what is this? This is also Poland. We can find higher volatility. Sometimes it's going down, but if you are adding together the cases, then we can see that volatility of the green assets had a higher tendency to be positive. So still we can verify the previous thing, that Bonds can be considered in the green segment more riskier. While it's quite strange because if they are riskier, so they have higher volatility, then their yield should be also higher. So what is the bias here? Because the yields are quite undecided, that are they higher or lower. So I was absolutely not satisfied after the ending of the analysis, so we can see that, okay, market is suspicious, but you cannot see it, this suspiciousness at the level of the yield. So they are not want to compensate themselves, so I don't know what is happening with this bias. So maybe this bias is coming from the level of investors, maybe this bias is coming from the level of or direction of monetary policy. So green monetary policy trying to acquire some of these assets on the market, and that's why this is biased. Or this bias is coming from the level of or direction of ETFs, or maybe a lot of mutual funds were launched which are purchasing or focusing on green assets. So these are these ESG oriented funds. So maybe this is just about the initiation of the market, because still we can say that, okay, the market is initiated, now we have assets there, but still the entire time series is 10 years. So we cannot have so many strong results, but yeah. So personally, if someone would like to say to me that, oh, please invest into green assets or green bonds, I would say no, because for me this is not convincing what I can see here. If the premium is the same, then risk should be also the same. So, yeah. Okay, and these are the cited sources. So if someone is interested in this topic, then you can read this.